Ever wondered why trade flips against you right after entry? The answer is often the market structure shift. In this video, I will break down MSS and how to spot it and how to actually trade it profitably. Firstly, you need to know what a simple market structure is. So uptrends, we want to see higher highs and higher lows. And for downtrends, we want to see lower highs and lower lows. But no trend lasts forever. This is where the market structure shift kicks in. What is MSS? MSS happens when price breaks in a major structural point, signaling a possible reversal. MSS can occur in bullish or bearish form. So we can also say an MSS is the transition of an uptrend to a downtrend or vice versa. Now there are certain tools or criteria needed for MSS confirmation. The first one is the moving averages. I used 9 EMA and 50 SMA crossovers. The second one is the fair value gap, which shows after a market structure occurs. The third one is the liquidity sweep, which is smart money. Fourthly, the candlestick pattern. You want to see an engulfing pattern, a pin bar, or an inside bar. Now, let's look at how we can trade MSS correctly with clear confirmation. Step 1, wait for MSS with a clear break of structure. I mean, market structure shift. Step 2, look for retracements in the FVG or other block. Step 3, entry aligned with EMA plus candlestick confirmation. This should be with a lower time frame and higher time frame context. Step 4, stop loss just below MSS point. For bullish, stop loss below, and for bearish, stop loss above. So let's see some chart examples.
Alright guys, so like I said in the earlier video, you want to see MSS in a continuation trend or in a change of market structure. Okay, in a change of market structure means from bullish to bearish. Now this is in a higher time frame context. What I mean is, you know, in a bullish trend we want to see retracement, and in the retracement, in the smaller time frame, that retracement is a whole trend. Okay, it's a whole trend. So what I mean, let me describe this in a drawing. So if the higher time frame is giving us something like this, okay, I'm just trying to replicate what the smaller time frame is going to look like. Okay, so this is the bigger time frame now, this is the higher time frame. Okay, so let's shift this now. Okay, then this is what the smaller time frame will look like. This is what the smaller time frame will look like. So for this first retracement, for this first impulse, the smaller time frame will look like this. Okay. So then the retracement, this is the first impulsive move. Then the retracement will now be like this. Okay, like this. Now you can now see market structure shift and, you know, come back again and start selling. Okay, so it will sell to this point. Okay, and what, make another market structure shift. Now it wants to start buying, then it will start buying again. Okay, and start buying, that is buy it. Now when it gets to this point, it will now start selling again. So it will now make market structure shift. So let's say there's an uptrend there, so that's okay. Then you want to see market structure shift and it was start selling. So this concept continues like that, both in an uptrend and in a downtrend. Now what I'm trying to let you know is that if this is happening in a higher time frame context, you need to go to the time frame higher than that time frame to be able to know if the trend is still going to continue or not. So let me give you the time frames to be able to match this with. Okay, so for 15-minute time frame, your smaller time frame should be the 1 minute time frame. For the 1 hour time frame, your smaller time frame should be the 5-minute time frame. For the 4-hour time frame, your smaller time frame should be the 15-minute time frame. Okay, so these are the time frames that you should be paying attention to every time in the market. Okay, so that being said, let's go straight to the chart so that we can be able to understand how this plays out. Now as you can see on the chart, I want to show you something real quick. So as you can see on the chart, we have an uptrend. I want to mark out only the uptrends and the so let's start from here. Let me start from here. Let me show this trend a bit. Okay, so let's start from here. You can see an uptrend, small retracement. Okay, we are going to the smaller time frame to look at this. So a small retracement, then you can now see another retracement after the impulse move. Okay, another impulse move again after the retracement, another impulse move again after the retracement. Okay, so that's like that, like that, like that. So okay, so there's already a market structure shift here. You can see it very well. Market structure shift. Then come here again. Okay, whatever it's doing here, but that's fine. Okay, so let's go now to the smaller time frame. This is the 1 hour time frame. So our smaller time frame will be the 5-minute time frame. Okay, so our smaller time frame will be the 5-minute time frame. Okay, like I said earlier, you are going to see what I explained. Okay, so you can just see exactly what I said. So you see the way we're marking out smaller trends, longer trends. Now you can see another trend inside of the 1 hour time frame. So we want to spot the market structure shift at the retracement. Where is the market structure shift? The market structure shift occurred here after this impulsive move. Okay, we had a break of structure, a retracement before a break of structure. This was the last break of structure to the upside. So after the break of structure, then we had a low, because every break of structure it leaves us with a higher low and a high. Now anything that breaks this low will give us the market structure shift, and as you can see, we had a candle closure. That is one of the factor you need to know. Candle closure below the candle. You can leave this one and come back to this second one. You can see it closed below. Okay, so let's just be straight. So after this candle closure, what caused the candle closure is what will be our next target. Okay, so this is the spot that caused the candle closure, that caused the market structure shift. And as you can see, market came down, moved up again before it started its move. So from here, this one here is where we want to put our interest at. This place here, after you see this move down like this, this is where we want to put our interest for sales. Okay, this is where I want to put our interest. But though price took, if you would have put your this thing here, price would have taken us out. So let's do that real quick so that we can see some examples on the charts very well. So if you put your entry here, because there's another block here, you need to put your entry here. Okay, so then we're targeting something like 3. Let's reduce our stop loss. Although the market is going to take us out if our stop loss is very tiny. So in gold, I always want to be risking nothing less than from 15%, but this stop loss is very small. So if we put a stop loss here, it's going to give you a risk reward of 6 RR. You can see it very well, 6 RR. You can see it gave us 6 RR with this trade, market structure shift. Very simple strategy. Okay, very simple strategy. So let's look for where the price now started going back in the move, in the 1 hour move. So let's go to the move up. So as you can see, we're still selling on up until this place. You can see this is where we had the last down push. So after one, okay, so after that push, then another one again, then you can see after this last down candle, there was no candle to push down again. You you can see that there's nothing again, nothing below here. So price break this higher low, you can see it here. Price break this higher low, this last low here. Okay, price broke it to the upside. Okay, so what caused the break is where we are going to be looking for our point of interest, and you can see that is this order block here that caused the break, okay. So after price pushed up, okay, pushed up, then left off this point here, this is where we want to be entering the market. So let's spot that real quick so that we can be able to see it for ourselves. So you can see that trading with MSS is one of the best ways to catch good trends and to trade also with a trend, not just trading blindly, because there's a saying that the trend is your friend. This is where it always plays out. So you just put it in this order block, and this is already a trend that has formed already. So you need to wait for the trend to play out. Now our stops will just be below this liquidity area. Why? Because price came there. Okay, so our liquidity point will be there, and this trade gave us a 2 to let's see, gave us more than 2. So if we took this trade with just one move, let's see how many it gave us, because I'm not setting that candle. So this trade could have given us 2 to 2, that is 2 RR for this trade, and even more if you are holding this trade for a very long time, because the trend, you can see that the trend continued. If we extend this further, you can see that the trend it continued. Can you see? Giving even 4 to 5 RR. You can see it very well. So trading MSS is one of the best strategies in trading. Okay, trading MSS is like the best trend following strategy. So that would be all for this video. If you have found value in this video, don't forget to like, subscribe to this channel, and share this video to somebody that will be in need of this kind of knowledge. And see you in the next video.